Hey traders, welcome to Charts and Coffee. Great to see everyone. Big dramatic sip of coffee. All right, so let's get to it, gang. Happy Thursday, everyone. Hope everyone is doing great. Okay, let's get to it. Okay, what you'll see on the screen, and I'm broadcasting in both rooms. Sorry, gang, I'm a little discombobulated here. I will get the hang of it. So, free trading room. Welcome. I know we were together on Tuesday, and I do have that room open so I can see the questions there as well as our friends over at the YouTube. All right, great. Let's do this. I did want to take a look at the broader averages and the economic calendar with you all first before we get to the questions. And we're going to take a look at the daily chart of the S&P. Now, you're going to see me toggle between the Thinkorswim and Trading View charts. My tools work on both. Those are the two platforms that I use the most. And we are continuing to see movement lower, gang. That's just what we're seeing this morning, a little bit more movement lower. A lot of folks have been asking me, Rag, we know you don't pick tops and bottoms. It's not about guessing, we're going to see lower lows or where even we're going to go necessarily. The question I've been getting the most is, Rag, when will you say you're no longer bullish? And let's also remember there's a couple different ways you can be bullish in this market. Literally two. Well, three if you want to include momentum. First of all, the first way that I like to be bullish is within the context of a trend. And Powell absolutely broke the trend. That was destroyed Friday, ratcheting up the expectations for the target rate probability a quarter point higher than we had been expecting. It forced the market to say, look, this is a Federal Reserve that's more hawkish than we thought most of the year. We must recalibrate. We must rediscount to factor that in. Then, of course, the questions come in, well, how much more hawkish can they get? This brings us to market structure, which is always going to be important, gang. Now we're in a neutral market. So before, uptrend. Now, this is sideways. I know it doesn't feel sideways, but hear me out. What we have are some support levels that we're actually just trading below. So it's going to be a little tricky. These are Darvis 2.0 levels. So these are all the support levels that I'm looking at to the downside. Not that we have to get to any of them, but these are all potential support. Now, anything that happens before 9:30 in the S&P, in the Dow, in the Nas, in the Russell, just generally in stocks, anything that happens before 9:30 a.m. Eastern is really not all that important. Anything that happens after 10 a.m., now we're starting to see the real vibe, the real opinion of this market. So right now, yes, we have a good bit of weakness. We're in a neutral market trend. As of yesterday, we did get down to the low end, right, of our stochastic, our slow stochastic. And this is at least beginning the argument, right, of a broken trend is chop, and is this chop oversold? I'm treating this market as bullish chop, no longer a trend, but bullish chop. And we could say this across many sectors and many indices. So it's not as if I'm just buying and buying and buying S&P. I'm actually not. Probably the most two tethered positions that I've had to the S&P are financials and Apple. And all of these have been very aggro position size. So when I keep in mind what the risk to the account is, it's about 1.25%. So we're still very risk oriented to the, well, what if I'm wrong scenario? All right. So with all that said, let's jump into the best part of the show. And that is, of course, your questions. Let's do it. So let me get rid of some of these charts and whatnot in the background and my notes. All right, let's get to it. First up is coming from our YouTube channel, Charts and Coffee. Good morning. Hey there, Nick. What tickers do I like to trade the S&P as an index? Well, you mean aside from ES futures? So ES futures are always going to be my go-to. I'm a futures trader at heart. I love to day trade the futures. Day trading margin is amazing. Those of you in the Sector Secrets Master Room, the futures room, when I'm with you all in the morning, you know that's going to be my go-to. That's going to be my touchstone for any S&P setup. That could take me to the SPY. Of course, a lot of you like the SPX. That's not my cup of tea, but that's fine. Look, however, this is the choose your own adventure part of it. This is the great part of it. However you do it, there's no right or wrong. There's only leverage and risk, right? There's no right or wrong, leverage, risk. You want to go to the micros, MES, fantastic. Another way of managing leverage and risk with a lower cost, lower risk contract because it's simply smaller. And then let's also remember we can go ES, MES, SPY, SPX, but then think about the heavily weighted sectors within the S&P as well. So that's the way I process that. And then, of course, I think about the options on the ES and the options on the SPY and, of course, the SPX, right, as well. Do I use MT4? JJ, I really don't. If you would have followed my work, say, in the early 2000s, my first 3 books were about Forex, and the Forex platform that was used the most was MT4. About 8 years ago, maybe a little bit more at this point, I switched over to TradingView. And so, no, I do not. I do not look at. I really don't use MT4. Nothing wrong with it. I just don't use it. And I think MT5 has been adopted, which is a little bit different than MT4 in that the languaging is different for the coding. So no, I've been using MT4 for probably the better part of 6-7 years for Forex now. And by the way, MT4 was mostly a Forex, some futures, but I think TradingView is far better, in my opinion. And I can code better in PineScript than I can, MQL? Good morning. It's me, Claire. Do pre-market trades have a factor in the intraday trend? Claire, only in so much as am I inheriting a trend on the open? So, for example, on the aforementioned ES, am I inheriting a trend up or down? It looks to be a neutral trend, even though we've been moving lower overall for much of, you take a look, most of the weakness. So I want to mention something here. It's not just what price is at right now, who got us here, right? And which financial centers were open. Notice that most of the weakness was at the tail end of the US session. And then we weakened right into the Asian session. And then 8 p.m. or 2000 hours. Look at what we've been doing ever since then. We've been, since the Asian session really opened, 8 p.m. yesterday, Eastern, we've been moving sideways. We're not seeing a lot of weakness through Asia, the Asian open, the Asian close, the European open, or even the UK open. And even at 7 a.m., when I consider that the first cup of coffee in the morning in New York, not even seeing a lot of strength or weakness there. So we're definitely stuck in a range. You think this market is waiting on non-farm payroll? I'm with you. I think this market's in absolute wait and see mode. So going back to, do pre-market trades have a factor? In so much as I want to look at the full pre-market. Pre-market begins, Claire, 8 p.m. yesterday, 8 p.m. the Asian session. Then let's look at volume levels, right? What I call volume ledges. Where is there more concentration of contracts traded linked to price? Okay. So Peter asks, what is my view on the market for the next 2 to 3 days? Peter, I don't look, Peter, and thank you for the question. So when I look at the market, I realize 2 things. I don't even know what I'm having for dinner tonight, Peter. I don't even know. And it's my birthday, and I don't even know what I'm having for dinner tonight. There's no way that I can look at today and tomorrow, especially with non-farm payroll coming out at 8:30 a.m. tomorrow, right? There's no way that I can say, well, here's what non-farm payroll is going to do, and here's the way the market's going to respond. And oh, yeah, we've got a 3-day weekend, and come Tuesday, what's going to be the market's mood? I'll tell you what, Peter, I really don't know. I can't tell the future. And I think you know this, neither can anybody else. However, if we're looking at the underlying market structure, there's two ways we can do this. There's two ways that I battle what Annie Duke talked about in thinking in bets. If you want to understand why I have this, opinion of we really don't know what's going to happen in the future, we think in bets. If you haven't read Annie Duke, that book, I'd highly recommend it. How do we make decisions as traders when our capital is at risk, but we have incomplete information? And maybe we'll get into that. We need a book club. And that would probably be that, or Atul Gawande's brilliant The Checklist Manifesto would probably be one of the two books that I would highly recommend to traders wanting to read non-trading books that will help them become better traders. I don't know, but what I do know is where the catalyst, the hot zones are residing that could move that sentiment. Tomorrow at 8:30, that's the big one. That's the big one. So I definitely appreciate the question, but the truth of the matter is the only honest answer anyone should ever give to that is, I don't know. We can either trade short term and just look at the follow through for maybe a couple of hours, or we can look at long term and say, look, at this level on a weekly chart, I might want to engage a buy, or on the daily time frame, when we get to this certain level, I'll reassess what the underlying market trend is and ask myself, do I really want to be a buyer or a seller if we reach, say, 3,900, or if we reach 3,800, or whatever it may be? So it's less about what the market is going to do for me and more about what am I going to do when the market gets to certain price levels. That's what I believe truly what trading is. I totally appreciate the question, and that's the mindset for me. All right, next up, what parameters do I use to decide it's time to sell a losing trade? Sue, it's always going to be based on what I call, and maybe Trish named this, the market money math. Money math means I know what my account balance is. I know what my maximum allowable risk to the account is. I know what, hypothetically, if all my trades were to get stopped out, am I near risk of ruin? And then my stops are predicated on that understanding that the cardinal sin of trading is to be in a position that I exceed the risk of ruin in the account. Those are the parameters. It's always based on risk. It's always based on never worse than a 1-to-1 risk reward ratio, never using an upside down risk reward ratio, and always remembering, if I'm wrong, not just in one trade, but a series of trades, am I anywhere near risk of ruin? Which, by the way, for those of you wondering, Rog, what the heck's risk of ruin? It's 50% loss of your entire account. That, my friends, is a quote unquote blown up account, not zero. We tap the brakes at 25. Hey, what's going on if I've lost a quarter of my account value? If we lose 50%, stop, turn the engine off, get out of the car, right? We don't just tap the brakes. We know something's wrong. And that's where I say going to zero, busting an account, is really just a misunderstanding of the arithmetic of risk. The holy grail, gang, it's not a secret squiggle. It's not some super secret strategy. It's always going to be position sizing and risk management. So thank you for the question, Sue. Good stuff. All right, next up, what are my thoughts on Apple going forward? So straight up, JG, I had a position on Apple. It was aggro, 1.25 point risk. Notice how I know exactly what the potential risk to my account is, barring gaps, in every position. I'm out of Apple. I thought the wave would hold. Of course, Powell had different ideas. Our minor low never formed and held. I'm out. So what's the next thought on Apple? What's going to happen at that 200? The 200 propulsion's on the radar. Call it 155.5. I'd like to see an oversold stochastic, which we have. But let's face it, gang, this week is all about non-farm payroll. What is that jobs number going to say about the messaging of the Fed? If that number is another huge 500K number, which, let's face it, I don't think any of us are discounting that. That's not what's factored in. But let's say it's another big number, far better than expected. that green lights the Federal Reserve to be even more hawkish. So we could calibrate from 3.75 to 4% target rate from the Federal Reserve to 4 to 4.25. That could happen very easily with quote unquote good data. If tomorrow's jobs number is a miss, watch how quickly we start to pull back on expectations for a more hawkish Fed. Yes, bad data is good for stocks. Strong, good data is bearish for stocks. And that's the way I'm going to look at it. So Apple's going to get caught up in that, JG. So my opinion of Apple cannot be separate from what I know the catalysts for the next, say, 24 hours are going to be for price action. Tomorrow at 8:30 is going to be pretty intense. And my Sector Secrets Mastery folks, we're going to trade that live. You're going to watch me pull up my HPMRs, right? I love these things. Cook these up for Forex. Gosh, 7-8 years ago at this point, we're going to pull up the HPMRs. We're going to do this at 8:30 and take a look how these HPMRs perform in an extremely volatile environment. High risk, absolutely. Micros are great, minis are great, but we're going to trade this tomorrow morning at 8:30. Really looking forward to that. All right, next up, David asks, I'm new to the channel, and what are my indicators? David, that's a big topic, and I don't know that I could wrap that up in 3 minutes, but I've got an even better solution. For anyone who's thinking, Rob, that's a lot of secret squiggles there. And, Lorna Bot's reminding me, it's been almost 10 years. Well, yeah, I guess it would be, because my last book in 2010, 2012 is where we started talking about historical volatility. That's true, Lorna. See, I even forget how long I've been doing some of this stuff. Thanks, Bot. All right. So head on over, David, head on over to countdowntrader.com, www.countdowntrader.com. My current market analysis, tons of educational videos and breakdowns, courtesy of Trish, tons of free indicators. That's all at countdowntrader.com. That will bring you up to speed with how I'm viewing the market and most of the indicators that I use to do it. And that's a great way to get started. And there's plenty of information there. It's really a resource for everything I do. So thank you for the question. Thank you all for the birthday wishes. I do appreciate that. 51 today. I'm level 51. So it feels pretty cool. All right, next up. Charlie, how are you? Am I not stopped out at Apple at this point? Yes, my friend. Oh, yeah. And I know you asked that a lot earlier. Yeah, I'm out. Took my paper cut. I'm out. I've had a number of paper cuts. Gang, total, I'm down 1.25, 2.5, 3 3/4. I think I'm down about 6% in my account with my recent aggro, 6%. Am I happy about it? No. But what's really cool is we're also day trading. So while I'm seeing a little bit of I got stopped out of quite a few positions, 4, when Powell did what he did. Those were aggro positions, small positions. Gang, I love talking about losses. I can keep you all here till 10 a.m. talking about losses, because that's how you become a profitable trader. On the flip side, as a day trader, I think conservatively, we're up about 80% over summer day trading. While I'm not happy about my first foray back into some trending markets as we go into the fall trading season on the daily time frame swing trades, it feels good to know that until I get clarity again, as we've been doing in the Sector Secrets Mastery Room and the Simpler Futures Room, we day trade. And in those 9:20 to about 11:30, 9:20 to really 10:30, that 1 hour window, I'm able to find small pockets of clarity, small pockets of follow through, and very, very gradually, very systematically, we've been building that day trading account. So when I get some pullbacks that end up being stopped out on my swing trades, I realize, bless you, puppy. Gesundheit. The pullback there, this is why we want to embrace multiple time frames and multiple strategies. So it's a little bit like a scale. So yeah, I absolutely am. And I don't mind to re-enter, right? Charlie, remember, take the small loss, take the loss while you can, not when you have to. And then we'll recalibrate going forward because look, coming back, there is a point at which a loss is too big to fail. We never want to go there, right? And that's when you have that thought of, I can't get out now. I'm losing too much. That is a hat. What are you allergic to this morning, baby girl? The dog's over here having a little sneezing fit. You okay? All right. So when you have that, I can't get out now, I'm losing too much feeling, that's a really dangerous place to be because paper cuts are easy to take. We say, okay, I was wrong. We move on, and then we can free up some bandwidth and maybe find better windows in the market, which is what we did yesterday. Are we looking at other markets in the S&P? No, we're looking at metals. We're looking at natty gas. We're looking at natty gas stocks. We're looking at oil stocks. We've shifted our focus saying, okay, where's the clarity now, right? And we're okay with letting things go and refocusing on where the opportunity is. Thank you for the question. Thank you, everybody, for the well wishes. And I will see you all tomorrow. Well, I'll see you all on the YouTube channel tomorrow. Free Trading Room. I'll see you all Tuesdays, Wednesdays, and Thursdays. All right. We'll caffeinate and dominate then. Be good to each other, gang. I'll talk with you soon.